Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Wednesday, the 4th of September. I'm Daniel Lam, your host for the podcast. My 5-year-old boy is now into superheroes. He has storybooks about the Marvel characters. And I have been spending much time answering his endless questions. The FAQ, by far, is that he will point to a picture and ask if the character is a good guy or a bad guy. Well, if only things would be so clear-cut in investments, then our lives as strategists would be much easier. Now, of course, the biggest question mark hanging in investors' minds over the following few months is the outcome of the US elections. Nothing is clear at this moment in time. The entry of Harris and the ensuing tight race means uncertainties. And that is a key reason why we have recently downgraded global equities to a neutral. Now, previously, it was looking extremely likely that there would be a Republican clean sweep. And this will give the Trump administration freedom to implement policies such as further cuts to corporate taxes, deregulation of the energy and financial sectors, and those would be the bullish scenario for risky assets. However, after the entry of Harris, that is looking like a low probability event. Instead, the highest probability scenario would be a divided Congress. Now, if we do get a Harris presidency and a divided Congress, then we will likely have status quo, with Republicans continue to stifle significant new policies. So this policy gridlock scenario would likely be neutral for markets in the short to medium term, in our view. On the other hand, if we get a Trump presidency and a divided Congress, then it may entail mostly negative implications for equities. This is potentially the worst scenario for financial markets. While Trump could rely on executive orders to bypass legislative gridlock and effect changes in trade and immigration policies, the extension of tax cuts would require the involvement of Congress. With the odds of a Republican clean sweep falling significantly now, the markets may increasingly focus upon the tariff trades. Finally, for the sake of completeness, a Democratic clean sweep would bring negative near-term impact on financial markets because individual tax cuts would be allowed to expire, corporate tax cuts potentially reversed, and stricter regulations and antitrust measures could be introduced. So, out of the 4 scenarios, 1 is positive for risky assets, 2 negative, and 1 neutral. So this explains why we have turned a little bit more cautious on risky assets in our latest allocation. That is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details, visit Market Views on the Go on our website or click the link in the description.